Hello everyone, welcome to Tesla Daily News. Today is June 17th, Wednesday, and the following is the latest Tesla news. According to market data, Tesla shares closed at $404.66, down from a previous close of $411.15. Intraday, the stock opened near $404, touched a high above $412, and dipped to just over $400 on trading volume of about 40 million shares. Technically, the chart currently shows mild pullback within an ongoing uptrend. Short-term traders will note the failed attempt to hold above the prior close and the relatively tight trading range, which may indicate consolidation after a strong move connected to the recent SpaceX IPO and broader enthusiasm about Elon Musk-linked companies. According to Limit, market commentator the Kobayashi letter highlights that Elon Musk's two flagship companies, SpaceX and Tesla, now command a combined market capitalization of roughly $4.4 trillion. The report says SpaceX is trading above $220 per share in overnight trading, implying a valuation close to $2.9 trillion, putting it within striking distance of Microsoft's market value. Adding Tesla's market cap brings the combined figure to a level larger than Apple and roughly similar to Alphabet, Google's parent. For Tesla investors, this underscores how much of the current valuation narrative is tied not only to electric vehicles, but also to Musk's broader ecosystem in space, AI, and communications. The article also notes that SpaceX is trading about 63% above its IPO price of $135 and has raised a record $85.7 billion through the offering, reinforcing the extraordinary capital access and investor enthusiasm around Musk's ventures. According to Clean Technica, newly revealed EPA filings have made the key specifications of Tesla's upcoming Cybercab public, even as major questions remain around its commercial impact. The document points to a compact, highly efficient vehicle, a roughly 326-volt battery system rated at 146 amp-hours, implying an energy storage capacity near 50 kilowatt-hours, a front-mounted permanent magnet motor rated at about 163 kilowatts, or 219 horsepower, and a curb weight around 3,113 pounds with a gross vehicle weight rating near 3,730 pounds. In controlled EPA lab testing, the Cybercab achieved an impressive 418 miles off range, which the report suggests will likely translate to around 300 miles or less under standard EPA real-world estimates. Clean Technica notes that these specs signal a hyper-efficient, very small vehicle, designed to seat only 2 passengers. That design choice fits Tesla's vision of a robotaxi-optimized platform rather than a traditional family car. For investors, the key issues are not just the engineering details, but the business implications. Can Tesla actually offer the Cybercab to retail customers at or below $30,000? Will initial versions include basic controls like a steering wheel and pedals, or will Tesla push quickly toward a fully driverless interior? And critically, will regulators allow truly autonomous operation at scale, enabling Tesla to deploy its own robotaxi fleets and capture recurring high-margin software and service revenue? The article raises the possibility that, despite the strong specs, demand from private buyers might be limited for a 2-seat vehicle, leaving the robotaxi business model as the primary value driver for this platform. According to another analysis from Clean Technica, robotaxis in general, including Tesla's planned Cybercab, may struggle to displace private car ownership on a large scale, particularly in markets like the United States. The article compares the economics of transportation as a service with the cost of owning a personal vehicle. Existing ride-hailing and taxi services are already a form of transportation as a service, and their cost per mile tends to be significantly higher than that of owning and operating a privately owned car over several years. Even if autonomy removes the human driver cost, the piece argues that robotaxi operators will still face vehicle costs, maintenance, energy, insurance, and corporate overhead, making it difficult to consistently offer rides at a price per mile low enough to convince mass-market car buyers to give up their own vehicles. Clean Technica also emphasizes convenience and system-level effects. When you own a car, it is always available at your doorstep, and you can treat it as a mobile storage space. A robotaxi, by contrast, must be requested, then drive from its previous location to pick you up, and finally move on to the next passenger afterward. That additional repositioning adds miles that are not directly serving a passenger but still incur cost. The article points out that this extra driving not only raises the real cost per useful mile but can also worsen traffic congestion. For Tesla investors who expect robotaxis to fully replace traditional car sales, this analysis is a reminder that the addressable market for autonomous ride-hailing could be substantial, yet may not be as radically disruptive to private vehicle ownership as some early projections suggested. Instead, The opportunity may be more incremental, focused on displacing human-driven taxis and ride-hailing in dense urban areas and selected international markets. According to Dunya News, the Dutch Transportation Minister Vincent Carmens has publicly defended the national approval of Tesla's full self-driving, or FSD, supervised software for use on Dutch roads. The Netherlands Vehicle Authority, the RDW, approved Tesla's FSD software on April 10 in what was described as a European first, and has proposed that the system be allowed across the entire European Union. This has already led to preliminary approvals in Belgium, Denmark, Estonia, and Lithuania. Following a Reuters investigation that suggested Tesla had supplied misleading safety statistics in the run-up to European approvals, Dutch lawmakers questioned whether the RDW's decision relied on Tesla-provided data. Dunya News reports that Minister Carmen stated in Parliament that while Tesla statistics may be open to scrutiny, they did not form the basis of the RDW's approval. Instead, he emphasized that the authority conducted its own independently verified testing under European regulations. The minister also said that, so far, vehicles using the FSD system have driven roughly 24 million miles on Dutch roads without any noteworthy incidents, aligning broadly with a Tesla Europe statement that cited more than 15 million miles over a slightly shorter period, with no highway collisions and only a few minor crashes on smaller roads. For Tesla, this defense from a senior European official is significant. It helps protect the company's regulatory momentum in a major region, reinforces the perception that independent authorities see safety benefits in supervised FSD, and supports the strategic goal of expanding software-based revenue across Europe. According to RTL News in the Netherlands, Minister Carmens also addressed Dutch television audiences directly about concerns surrounding the safety of Tesla's self-driving capabilities. The minister reiterated that Tesla vehicles equipped with the FSD functionality are, in his words, allowed to just go on the road in the Netherlands because the authorization is based on the RDW's own testing rather than on unverified data from the manufacturer. This televised reassurance is important from a sentiment standpoint. It signals to Dutch consumers and to other European regulators that the government stands behind the decision and currently sees no reason to restrict Tesla's supervised autonomous features. For investors, these Dutch media reports suggest that, despite negative headlines around Tesla's safety statistics, the European regulatory process is still moving in Tesla's favor. A wider EU rollout of FSD supervised could create a substantial high-margin software opportunity, particularly if Tesla successfully aligns its subscription pricing with local income levels and regulatory expectations. It also helps bolster Tesla's claim that supervised FSD, when used correctly, can improve road safety relative to human-only driving. According to Taiwan's Liberty Times Auto section, Tesla has formally submitted its full self-driving application to Taiwan's Vehicle Safety Certification Center, marking the start of the regulatory process to bring FSD to Taiwanese roads. Tesla Taiwan confirmed that it is cooperating actively with the Ministry of Transportation and the Safety Center to kick off the review of this new driver assistance technology. The company is positioning this step as the beginning of a countdown to FSD becoming available in the Taiwanese market. Liberty Times explains that Tesla is relying on data collected from more than 8.5 million vehicles worldwide to train its FSD system, representing what the company describes as driving experience equivalent to more than 100 years of real-world conditions. Tesla claims that a newly delivered car needs around 10 minutes to download and integrate the accumulated training data, giving each vehicle access to far more diverse scenarios than any individual driver would experience in a lifetime. The article notes that, according to Tesla's latest vehicle safety report, benchmarked against statistics from the U.S. National Highway Traffic Safety Administration, Tesla cars using FSD under driver supervision have shown a safety performance reportedly more than 7 times better than average vehicles. For investors, the key point is Tesla's continued global expansion of FSD, which, if approved, offers recurring, high-margin revenue beyond hardware sales. The report also mentions that Tesla will stop offering the one-time FSD purchase option in Taiwan at the end of June, maintaining lifetime rights for existing buyers but pushing future customers toward alternative purchasing models. That shift mirrors Tesla's broader strategic move toward subscription-based software revenue, which can stabilize cash flows and potentially increase the lifetime value of each vehicle on the road. According to the German outlet WADA, protests in Geneva ahead of the G7 summit in nearby Avion turned violent, with demonstrators targeting both symbols of global capitalism and specific corporate figures, including Tesla chief executive Elon Musk. During a large march involving tens of thousands of people, a parked Tesla was set on fire near the central bus station in Geneva. The act was widely interpreted as a symbolic protest against extreme wealth concentration and the growing influence of billionaire entrepreneurs over global economic and political decisions. The report notes that the demonstration was part of a broader mobilization against the GT, with protesters highlighting inequality, globalization, and the perceived dominance of wealthy nations and elites. The article links the anger directed at Tesla and Musk to his recent emergence as the world's first trillionaire after the much-anticipated SpaceX IPO, with SpaceX stock debuting at $150 per share and then surging, dramatically lifting Musk's net worth. For Tesla shareholders, these events illustrate a dual reality. Musk's success and prominence help attract investment and talent, but also make him, and by extension Tesla, a focal point for criticism about inequality, corporate power, and climate and labor issues. This heightened political visibility can influence regulatory risk, brand perception, and the stability of Tesla's license to operate in certain markets. According to Lecho in Belgium, a recent episode of the podcast Le Brief included a segment in which journalists test drove a Tesla equipped with autonomous driving capabilities on the streets of Brussels. While the article summary is brief, it notes that the Tesla's performance compared favorably with the average local driver, suggesting that in everyday urban conditions, the system handled typical city challenges reasonably well. From an investor perspective, such mainstream European media coverage contributes to public familiarity with advanced driver assistance and supervised autonomy. Positive or even neutral real-world tests in dense, complex cities like Brussels can help build consumer confidence and support regulators' willingness to allow broader deployment of Tesla's higher-level features, reinforcing Tesla's competitive position in European autonomy. Thank you for listening to Tesla Daily News. If you enjoyed this episode, please subscribe and stay tuned for our next update.